Hello viewers, welcome to my channel. I'm Hasham. Now in this video I am going to start the next problem number 5. Already 4 main problems I have completed on funds flow statement. This 5th problem is little bit difficult. A number of new points are arising, so concentrate well in this problem. And before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready. And the 5th problem, you see carefully. The following are the balance sheets of Sahil Limited as on 31st March 2016 and 31st March 2017. So last year 16, current year 17. Balance sheet is given. Equity and liabilities. First of all, we'll do one thing. We'll complete the working capital, statement of changes in working capital. That's the easiest thing, no adjustment, nothing. Only current assets and current liability. So here you can see current assets, inventories, trade receivable, cash and cash equivalent. All the 3 current assets I have taken here. All the 3 current assets and the respective values, whatever values are given in the problem last year, current year, exactly same values I have taken. Now current liability. Current liability consists of 2 items, trade payable and other current liabilities. So trade payable, other current liabilities. Whatever amounts are given, same amounts are taken. 3 current assets, 2 current liability. The working capital is current asset minus current liability, A minus B. So A is current asset, B is current liability, A minus B. 266 is the working capital last year. Current year 5,01,000. So current year increased. So here I have written increase in working capital. How much is the difference? 2,35,000. In that column, whichever is less. The total is 5,01,000. We got the answer increase in working capital 2,35,000. Now in order to prove whether it is correct or not, we have opened the column increase and decrease. So increase 3 lakh to 3,50,000, 50,000 increased. 162 to 254 increased by 92,000. 40 to 80, 40,000 increase, all increase. In trade payable, if there is increase, we take it in decrease column. If it is decreased, we take it in increase column, opposite. So here it is decreased, so increase column. Here it is decreased, so increase column. After taking all these things, now last line, it is if it is increased, take the amount in decrease column. So there is increase in working capital 2,35,000, take 2,35,000, decrease column. Now automatically the total of increase and decrease is same, 2,35,000. That means our calculation of 2,35,000 is correct. So we have easily prepared the working capital. Now I am moving on to source or application. Here there are a number of new points. So concentrate. Share capital. Last year 1,60,000, current year 2,20,000. Issue of shares. Is there any adjustment given? No, nothing is given regarding shares. So issue of shares, you can see here. Issue of shares 220 minus 160, 60,000 over. Next comes reserves and surplus. This reserves and surplus, note number 1. So come to the note. Reserves and surplus. So surplus as per statement of profit and loss, last year 250, current year 5 lakh. The surplus increased by 2,50,000. So this surplus will make use to find out funds from operation. Here you can see calculation of funds from operation. Increase in surplus 2,50,000 we have taken. Now preliminary expenses. Actually preliminary expenses is called fictitious asset, imaginary asset. And preliminary expenses will be deducted from reserves. So last year preliminary expenses was 14,000. Current year it is 12,000. So there is decrease in preliminary expenses. In other words, preliminary expenses are written off. So that preliminary expense written off is a non-cash item. This is the new point. So non-cash, non-operating expense. In this you take preliminary expenses written off. How much is written off? 2,000. That is taken on non-cash. Next comes fixed assets. Under fixed assets, before that you can see non-current liabilities are not there. Current liability already we have taken. Now come to fixed assets. Here there is a new point. Fixed asset consists of building, only building. Building at cost last year 140, current year 218. And depreciation on building last year 10,000, current year 11,000. This is the accumulated depreciation. And additional information is given. During the year, a building which was purchased earlier for 14,000, depreciation written off on that building was 1,000. and it is sold for rupees 1200. One building which was purchased earlier for 14,000, on which depreciation of 1,000 was written off so far. So what is the present value of the building? 13,000. 14,000 minus 1,000 debt. So 13,000 is the value of the building, and that 13,000 building was sold for 1200. So there is loss. 13,000 worth of building was sold for 1200. So there is a loss on sale of building. We have to open two accounts. One building account, another accumulated depreciation account. So whenever an asset is sold, better to make two accounts, asset account and accumulated depreciation. Last one is a dividend of 40,000 has been paid during the year. This dividend paid will appear twice. First of all, dividend paid should be taken as an application. Remember, first time we are coming across. Always I suggest you to keep a notebook beside you while watching the video. Whenever I say something important, write it down there itself. So dividend paid, given an adjustment, appear twice. Once dividend paid should be taken on application side, dividend paid 40,000. Again this dividend paid will be added to calculate funds from operation. Calculation of funds from operation, dividend paid 40,000. If you forget to take anywhere, definitely your source and application will not tally. Finally, your source and application will not tally if you commit the mistake. That's why two times. First one, application. Second, it will be added to surplus to find out the funds from operation. Now, I have opened two accounts. One account is building account, another account is accumulated depreciation. So what is the opening value of building? It is given in the problem, 1,40,000 is the building value. So to balance brought down 1,40,000. What is the closing value of building? 2,18,000. 2,18,000 I have taken here. 2,18,000. Opening balance debit side, closing balance credit side. Opposite is there for accumulated depreciation. Accumulated depreciation, opening balance 10,000, closing balance 11,000. So by balance brought down 10,000, to balance carried out 11,000. That's all. Now we have to pass the entries. Now remember, whenever an asset is sold, three entries are passed. The first entry will be entries on sale. For your convenience, I have written all the entries. The first entry, bank account debtor to building account for sale proceed. For sale proceed, bank account debtor to building account. Bank account debtor 1,200, building account 1,200. We don't have the bank account, but we have building account. The building account should be credited. So here credit side by bank sale. What is the sale proceed? 1,200. 1,200 is the sale proceed. Second entry, accumulated depreciation account debtor to building account. The depreciation on that building which was sold. Depreciation on that building which was sold. 1,000 rupees is the depreciation. So accumulated depreciation account debtor to building account 1,000. Accumulated depreciation debited. So debit side to building 1,000. Depreciation on building sold. This is the depreciation on building sold. Now building account should be credited. So building account credit side by accumulated depreciation 1,000. Two entries we have posted. Now third entry will be profit or loss on sale of the building. Actually the cost of the building was 14,000, but 1,000 depreciation was provided. So 13,000 is the book value. 13,000 worth of building was sold for 1,200. So there is a loss. The loss on sale of building 11,800. The entry will be profit and loss account debtor to building account. That is the entry for loss. The profit and loss account we don't have. Building account credit side. So credit side by profit and loss account loss. How much? 11,800 is the loss. That's all. All the entries we have posted. Now we will find out how much is the depreciation for the year. Debit side you can see 1,000 plus 11,000 is 12,000. Here also I will take 12,000. So 12,000 minus 10,000, 2,000. This 2,000 is the depreciation provided during the year. So by profit and loss account, balancing figure, it is not given in the problem. By preparing the account, we come to know. So 2000 is the depreciation for the year. Depreciation for the year. This depreciation for the year should be added as non-cash item. While calculating funds from operation, depreciation on building 2000. This 2000 is the total depreciation on all building. Right? Now come to building account. Credit side amount is more. So we find out what is the total. 1200 plus 1000 plus 11,800 plus 2,18,000. 2,32,000 is the total. So 2,32,000 is the total. Here also I will write on 2,32,000. From 2,32,000, deduct 1,40,000 minus 1,40,000. 92,000 is the balance. This is to bank. Balancing figure. Purchase. So debit side less. It means there is a purchase of building during the year. That means during the year, one building was purchased, one building was sold. The building purchase should be taken on application side. So here I am taking purchase of building. What is the purchase of building value? 92,000. Similarly, there is a sale of building. There is a sale of building for 1200. So sale should be taken here. Sale of building 1200. So purchase we have taken, sale we have taken. Right? So both the accounts over. Entries I have explained. Now come to funds from operation. Funds from operation increase in surplus 2,50,000. Just now I told you, not cash, non-operating item. In this you have to remember which are the items to be added. The first one is depreciation. So here depreciation on building 2,000. That 2,000 I have taken. Secondly, loss on sale of building. This is a loss. The loss on sale of building is 11,800. Here we have taken 11,800. This loss is a non-cash item. So here loss on sale of building 11,800. Third one, preliminary expenses written off. Just now I told you, fictitious asset. 2,000 rupees preliminary expenses decreased. That is written off. Last one, dividend paid. Last item it is given. Twice it will come. Dividend paid will be taken here and dividend paid will be added. So if you add all these values, you are getting funds from operation 3,05,800. So here funds from operation 305,800. Funds from operation. Now lastly, increase or decrease. Here we got increase in working capital 2,35,000. So here I am taking 2,35,000. That's all. Completed. Now if you do not commit any mistake, then the total of source and application will be equal. Now we'll check. So 40,000 plus 92,000 plus 2,35,000, 3,67,000 you are getting. So 3,67,000 I am getting on the application side. Same 3,60,000 I should get on the source side. 60,000 plus 1,200 plus 305,800. 3,67,000. That means we have done correctly. Nothing is omitted. Remember, this is a difficult problem. Twice, thrice you watch the video. Then only you will get the command and practice it. So this is the end of problem number 5. Come on, now I am going to start the next problem, problem number 6. The following information is extracted from the financial statement of Abhinav Limited as on 31st March 2016 and 2017. Last year 16, current year 17. The data is given 2016, 2017. Share capital. Share capital last year 4 lakh, current year 6 lakh. So there is issue of shares. But before that, first of all, we finish off the working capital because it's very easy to complete the working capital. Then we can concentrate on source and application. So for making this working capital, statement of changes in working capital, we need current assets and current liabilities. So see, what are the current assets? Last 3 items. Inventories, sundry debtors, cash and bank balance. These 3 are current assets. So inventories, sundry debtors, cash and bank balance. These three items are there. And current liabilities are sundry creditors, proposed dividend, provision for taxation. These three are current liability. Again I repeat, sundry creditors, proposed dividend and provision for taxation. These three are current liabilities. So three current assets, three current liabilities. Take the total A, total B, working capital A minus B, 1,30,000 and 370 minus 250, 120. So last year working capital 130, 1,30,000, current year 1,20,000. So 20,000 is the decrease in working capital. So decrease in working capital 10,000. So 130 to 120. So 10,000 decreased. Total 130. Now to confirm whether 10,000 is correct or not, take increase or decrease column. So 180 to 2 lakh increase 20,000. 1 lakh to 155 increase 55. 50 to 15 35 decrease. Now opposite rule for current liability. 120 to 135 increase is there, but we write on in decrease column. Here 40 to 60 increase is there, we write in decrease column. 40 to 55 increase, but we write in decrease column. That's why I'm stressing that you must be thorough about the theory of funds flow statement. Without understanding the theory, you will get confused if you join now. So here last one, decrease 10,000. This should be taken in increase column. The total is 85,000 in both the columns. When you get the same amount in increase and decrease, that means your answer is correct, 10,000. Now I am coming to source and application. Forget about current asset and current liability. Now we are not at all considering current asset and current liability. Only non-current items. Share capital last year 4 lakh, current year 6 lakh. Issue of shares. You can see here. Issue of shares 2 lakh. Second one, reserves and surplus. This reserves and surplus we make use to find out funds from operation. Calculation of funds from operation. Increase in reserves and surplus 1 lakh. Last year 250, current year 350. So 1 lakh rupees increased. Next, depreciation fund. It is accumulated depreciation. I'll tell you what we have to do with this accumulated depreciation. Bank loan. Last year bank loan was 1,60,000. Current year bank loan 80,000. That means during the current year the business has repaid the bank loan. Bank loan have decreased. So repayment of bank loan means application. So application side you can see bank loan repaid 80,000. Right? Next, sundry creditors, proposed dividend, provision for taxation already we have taken. Now land and building. There is no adjustment given for land and building. Last year land and building 3 lakh. Current year land and building 4 lakh. Nothing is given regarding depreciation or any other information. The land and building purchased because it is increased. So purchase of land and building should be taken on the application side. Purchase of building 1 lakh. Right? Next, plant and machinery at cost 4,60,000 last year, current year 6,30,000. There is some adjustment given for plant and machinery. Then we'll discuss in the adjustment. Then inventory, sundry debtors, bank balance already we have taken under current assets. All the items we have discussed. Now see the adjustment. A machinery which was purchased earlier for 60,000 was sold for rupees 4,000. Whenever an asset is sold, two accounts you have to make. Already I told you in the last problem also. Here also one machine was purchased for 60,000. Now current year it is sold for 4,000. The book value of the machine was 6,000. That means after writing off depreciation every year, presently the book value of the machine is 6,000. And what is the cost of that machine? 60,000. We have purchased the machine for 60,000. Every year we have provided depreciation. Now its value is only 6,000. So how much decreased? 54,000. 60,000 minus 6,000. 54,000 is the accumulated depreciation on that machine which was sold. The company also purchased a new equipment. A hint is given. During the current year, some more machinery are purchased. The company has issued new shares to the extent of 2 lakh for cash. This is not required because already we have decided first item share capital last year 4 lakh, current year 6 lakh. So 2 lakh rupees share capital increased. So we have assumed that shares were issued for cash. Here we have taken issue of shares 2 lakh. Next, you are required to prepare statement of changes in working capital. Already we have prepared. And statement of source and application of funds. The new point, not new point, already we have covered up in the last problem also. We have opened two accounts, plant and machinery account and depreciation fund account. The plant and machinery account opening balance, last year balance 4,60,000, current year balance 6,30,000. Opening balance will be taken on debit side, closing balance on the credit side. For depreciation fund, it should be opposite. Opening should be taken on the credit side and closing should be taken on the debit side. Now, whenever an asset is sold, three entries you have to remember. Already I told you in the last problem also. The first entry will be bank account debtor to machinery account. Here you can see. Bank account debtor to machinery account. At what price it was sold? 4,000. The machine was sold for 4,000. The bank account debit, machinery account credit. So machinery account credit side I am writing here by bank. Sale. At what price it was sold? 4,000. So I have taken 4,000. First entry posted. Second entry, accumulated depreciation account debtor to machinery account or depreciation fund account debtor to machinery account. So depreciation fund will be debited to machinery. How much is the accumulated depreciation? It was purchased for 60,000. At the time of sale, its book value is 6,000. So 60 minus 6, 54,000 is the accumulated depreciation. 54,000. Depreciation on machine sold. Depreciation on machine sold. Machinery account credit side by depreciation fund. 54,000. Two entries posted. Third entry will be regarding loss. Actually, the book value of the machine was 6,000 and it was sold for 4,000. So 2,000 is the loss. Entry profit and loss account debtor to machinery account. So machinery account credit side by P and L account loss. The loss is 2,000. That's it. All the three entries we have posted. Now we find out the balancing figure. 120 plus 54, 1,74,000. 1,74,000. Now 174 minus 80, 1,74,000 minus 80,000. 94,000 is the depreciation provided. So by P and L account balancing figure, depreciation for the year. And a total depreciation provided on the assets is 94,000. This 94,000 should be taken as non-cash item. The depreciation on machinery 94,000 you can see here. That 94,000. Similarly, loss on sale. How much is the loss on sale of machine? 2,000. This 2,000 rupees I have taken here. Loss on sale of machine, non-cash item. That's it. This account is closed. Now we'll come to the plant and machinery account. Credit side, you can see the total 4,000 plus 54,000 plus 2,000 plus 6,30,000. 6,90,000 is the total. 6,90,000. Here also I am taking 6,90,000. Minus 4,60,000. Minus 4,60,000. 2,30,000 is the balance. 2,30,000 to bank. Balancing figure. Purchase. It is not given in the problem. So during the year some new machinery is purchased for 2,30,000. So here purchase of machinery application side. When machine is purchased, application side 2,30,000. I have taken 2,30,000. Now there is a sale of machine. What is the sale proceed of machine? 4,000. One machine was sold, another machine is purchased. The purchased machine we have taken on application, sale of the machine 4,000. That I have taken on the source side. That's all. The accounts are closed. Now here funds from operation. 1 lakh plus 94 plus 2, 1,96,000. 1,96,000 is the funds from operation, FFO. Over. Now decrease in working capital. This decrease in working capital should be taken on the source side. Previous problem we were having increase. Increase will be shown on the application side. Decrease in working capital, source side. That's all. We have taken all the items. Now we'll check whether we have done correctly or not. If the total of source and application is same, then we have done correctly. Now check. 1 lakh plus 2,30,000 plus 80,000. It comes to 4,10,000. Here also 2 lakh plus 4,000 plus 10,000 plus 1,96,000. 4,10,000. Both sides equal. When both the sides equal, it means that our answer is correct. We have done correctly. So remember, only listening the lecture, watching the video and listening the lecture, that will not be sufficient. After listening the lecture, try to do it yourself. Practice the problem. Watch the video not once, twice, thrice. Then only you will get the complete command. I am putting my level best to make you understand. So inshallah, we'll continue the next problem in the next video.